Around the world now, Costco is one of the most beloved retailers by consumers because of its low-priced grocery items and membership-based business. Costco is also beloved by investors across the community, whether it be known for their outperformance of the S&P 500 or large special dividends that they often pay when they have excess cash. So in today's video, I'll be going over everything that you need to know as an investor before you buy Costco stock. We'll be talking about its valuation, business, going into its financials, and so much more. And unfortunately at Costco they don't sell the due dividend stocks, not drugs merchandise, so you'll just have to look in the description box for that. Thank you, and of course, roll the intro.
Hello, I like money.
If you already didn't know, Costco is a retail-based business. Now, they don't operate like most retailers like Target or Walmart. Costco is a membership-only business. You basically have to have a Costco card to shop at Costco. They have checkers when you exit and enter the store. Now, I had never been to a Costco until about a year ago, and I can honestly say it's a retail experience unlike any other. The Costco actual store is a warehouse, unlike an actual store like Target or Walmart, as I mentioned. It's a warehouse, and a majority of the items are at discounted prices compared to other retailers. Costco can keep prices cheap due to their membership-based business, which I'm going to get into. That's how they make all their money. Costco can be fooled when you look at its profit margins and its low margins because of its retail-based business, but if you actually look at where Costco is making the money, it's the memberships. Costco currently trades at a $293 billion market cap. Costco has 316,000 full-time employees, and they have stores based in the United States, Puerto Rico, Canada, the UK, and several other countries. Recently, Costco had its first store open in China, and it was absolutely packed. It was like a major event happening in a foreign country, and it just speaks to the volumes of Costco's brand. Now, unfortunately, it seems by the stock market that Costco has been kind of identified as one of those premium kind of companies, and it trades like that, definitely. Currently, Costco is trading at all-time highs. Costco also notoriously trades at a crazy high PE and trades at a premium valuation. Even with the current 45 PE ratio that Costco trades at, it has continuously outperformed the S&P 500. Costco is also notorious amongst the dividend investing community for paying large special dividends, which they recently just announced a special dividend of $15 per share. Now, before we get into all the financials and the dividends, let's talk about how Costco actually makes their money, which is with the memberships. Now, Costco has continuously grown their memberships over time, and they also have pricing power in this membership. Currently, Costco has 128 million members in 2023. In 2014, roughly 10 years ago, they only had 76 million members. I think the beauty of Costco, too, is that they're not really in a mature spot of their company either. The closest Costco to me is actually an hour away, and they're actually opening up one right now in my town. So Costco still has plenty of room to grow across America and across the world, to be honest. And their iconic brand and how their business operates is really popular amongst Americans. At the end of the day, it's supply and demand, and there's a lot of demand for Costco right now and not a crazy amount of supply. Another amazing thing about Costco's business is the pricing power that they have. Not only with their loyal customers right now, but Costco has also been continuously throughout the years increasing the price of that membership. And people are glad to continue paying as long as they keep getting their discounted items in bulk. Now, people are going to continue going to Costco not only because of the experience, because of the savings that they have. Let's dive into Costco's financials. And for the financials, I'll be using dividenddata.com. If you want to help support the channel, it really goes a far way. Use my link in the description. I get a big portion of that sale if you do choose to sign up for dividenddata.com. It's an amazing investing software. To start off, I like to look at revenue. Now, revenue is not the end-all be-all, and it's not the most important financial metric, but it is a big trap for a lot of newer investors. Free cash flow is what you want the revenue to equate to at the end of the day. But Costco's revenue is large, it's consistent, and it really is a dividend investor's wet dream. Costco's revenue growth is large, it's consistent. You could even see during C19 in 2020, they didn't even have an impact on them. That shows the magnitudes of how recession-proof their business model really is. They have a 3-year growth rate of 13.13%, a 5-year growth rate of 11.08%, and a 10-year growth rate of 8.5%. This is really, really impressive, and it's rare to find companies that can consistently produce this kind of revenue. But this revenue means nothing if their free cash flow doesn't look anything like it. When I'm looking at businesses to buy, I'm looking at free cash flow at the end all be all metric. It's the most important metric when looking at any company. It shows how much money they're actually making at the end of the day. Now, Costco's free cash flow isn't identical to the revenue growth, but the reason for this is the large special dividends that Costco pays. Whenever Costco has too much money or too much cash that they're holding that they can't re-intelligently spend back into growing their business through capital expenditures, they'll pay it through large special dividends. This impacts the free cash flow negatively, but you're getting a large dividend at the end of the day as a shareholder, so it's not really as consistent as the revenue you can see here. But it's still, over time, amazing growth. Now, these special dividends aren't predictable and they kind of come out of the random as you just saw, but you can see that it does have an impact on the consistency of that free cash flow. But if you understand why, it's really no red flag whatsoever. They have a 3-year growth rate on the free cash flow of 3.56%, an amazing 5-year growth rate of 18.89%, and an amazing 10-year growth rate of 17.2%. The 5 and 10-year growth rates are really more predictable for me, as the 3 years can be a lot more inconsistent due to the short-term fluctuations of the business. Taking a look at Costco's margins in their business, as a retail company, it is very low, but those memberships are going to obviously increase that margin. Their gross margin is only 12.7%, their operating margin is 3.43%, and their net margin is 2.75%. Now, the big thing with margins that I look for is consistency. You don't want to have a lot of years with crazy margin and then a lot of years with really bad margin. You obviously want to see consistency in your core holdings. Now, there are some companies like Target that do have kind of fluctuating margins, and that's going to be discounted with the valuation of the company, so you got to take that with a grain of salt. As I mentioned earlier, Costco is a business that is typically very cash heavy. You can see that they had a ridiculous amount of cash. This just shows how much of a profitable and how much of a giant business and operation that Costco really runs. To think that it has even more growth ahead of it is absolutely wild. Now, something that we don't love to see in our companies is debt. Now, debt can be used for a few different things. Sometimes some companies will use it in store leases. In that case, it's not really bad debt, but you just gotta always take a grain of salt with that. But you can see Costco, it doesn't have any debt. It's definitely a green flag in this department. Right now, looking at Costco's financials, it looks really, really good. Unfortunately, though, the valuation is the trade-off. Something that can eat away at your earnings over the long term, especially in the free cash flow department, is stock-based compensation. And you can see that Costco's stock-based compensation is absolutely nothing compared to their free cash flow. It has a decent amount, but absolutely nothing compared to the free cash flow, so for the stock-based compensation, it's a green flag from Costco. Alright, let's move on to Costco's dividend. Now, Costco's dividend growth statistics are majorly flawed due to the crazy special dividends that they do. You can see that their new $15 per share dividend had a 1,370% spike in the dividend growth. Now, Costco typically, without these huge special dividends, grows their dividend from 10 to 15%, more recently in the 13% range. This is absolutely amazing dividend growth from Costco, and combined with the large special dividends, your compounding effect is absolutely wild. Now, the best way to really judge a company's dividend safety, if you're more of a dividend-focused investor, is just looking at the free cash flow and make sure that's all great, but you can also look at the payout ratio. Right now, Costco's free cash flow payout ratio is 18.55%, and their earnings per share payout ratio is 19.88%. Now, I prefer looking at the free cash flow payout ratios that more indicative is their business and how that's performing compared to the dividend. Whenever Costco will do their large special dividend hikes, their payout ratio will suddenly jump, but it's no worry whatsoever long term. You can see that in 2021 they had 107% free cash flow payout ratio, so it's absolutely no red flag whatsoever. That's just part of the special dividend. Another way that a business can reward shareholders is through share buybacks over the long term, and unfortunately one of the only red flags with Costco really is that they're not doing share buybacks. At least they're not doing share dilution though either. I would though like to see them start eventually, gradually kind of buying back shares. Now, it could actually be a good thing that they're not buying back shares right now, as their stock price is really expensive, but I'm not too sure that's the case of why they're not buying back shares, as they haven't done a single buyback since the 1990s. So I'm not too sure that Costco's management not buying back shares is really a result of their high valuation in their opinion. This spring, I started my Costco position and I was dollar cost averaging $25 per week unless it was under $550. Unfortunately, the stock has jumped to $662. Right now, unfortunately, Costco is one of the smallest companies and stocks in my current dividend portfolio. I would love to add to Costco, but it would have to be in a reasonable dip. If it got back below $600, I would likely buy, but I was buying the stock near $530 consistently every week. Costco has had an absolutely ridiculous spike in their stock price, as you can see on the price chart, and Costco also has historically traded a really high PE ratio and has outperformed the market during this. So unfortunately, Costco is one of the companies where I'm highest in the green right now, but it's also one of the smallest companies in my portfolio. So I'd love the dollar cost average and buy more Costco. I do regret not buying more, but I also don't at the same time, as a lot of people are still saying that it was overvalued back then in May. I want to thank you all for making it to the end of the video. If you appreciate me putting this video together, it's one of my highest quality, if not the highest quality video that I've made in my opinion so far in the channel's history. I greatly appreciate it. If you have any companies that you'd like me to go over, leave them in the comment section and I'll do my best to get to them. I appreciate you guys for watching. Check out the Do Dividend Stocks Not Drugs merchandise, the links in the description, and any other ways to support the channel, the links in the description. Thank you all for watching. Smash the like button, subscribe, and Do Dividend Stocks Not Drugs. Have a good one.